over the past year or so, I've been slowly concentrating my stock portfolio into fewer and fewer holdings, into more high conviction bets, as opposed to having a huge basket approach like I was having before. However, I do have a significant amount still in index funds in my retirement account specifically, but when it comes to my taxable portfolio, it is relatively concentrated. And I want to talk about my third largest holding within that portfolio, which is Turtle Beach. We'll get to more of the details about the business in just a second, but at a high level, Turtle Beach is a gaming accessories company with a focus on console headsets mainly, but they're diversifying into other areas. Again, we'll get to that. And I've been consistently adding to my position in Turtle Beach, probably not as much as I'd like, given that the stock has really run up since my initial purchase down near the $20 mark. It's much closer to $30 right now, but I still think it presents an interesting opportunity worthy of discussion. Before we move any further, I have to emphasize that this is not financial advice, and you definitely should do your own research. There are a lot of risk factors here that are going to take your own analysis before you make a decision. You have to weigh them however you see fit. Ideally, this can serve as a springboard for your own future research. Anyways, let's get into it. One of the first things I want to look at when I'm looking at just about any business is the balance sheet. So if we go on down here to financials, I already have balance sheet open. We take a quick look at kind of their cash position as well as their debt. I think that is very important. And when it comes to Turtle Beach, they have a very strong position relative to the company size in that they have a good amount of cash, nearly $60 million in cash, and just about no debt, which is pretty awesome. If we look at long-term debt, they don't have any. So that is fantastic. They've slashed a ton of their debt and they have a good cash position relative to their size. Right now, they're trading at about a $450 million valuation. If we scroll a little bit further down to total debt, this is where you can actually see their total debt amount, which is at about $5 million. Again, very little compared to the amount of cash they have at nearly $60 million in cash. And also sticking with the balance sheet, we can take a look at the total shares outstanding. This would be a potential red flag because the share amount has increased over the past few years. We can actually take a look at the chart up here of that. We can see that that share count has risen pretty substantially over the last few years. And that's concerning as a shareholder because when there are more shares out there for the same business, each share becomes worth less. It's dilution. Just like when the Fed prints a bunch of dollars, those dollars become worth less because it's the same amount of stuff, but there are just more dollars going around. It's a very similar concept when we're talking about share dilution. As Turtle Beach, in essence, prints shares, it is diluting the existing shareholders because they now have a smaller portion of the business, relatively speaking. It's not astronomical share issuance, but I do think it is something to keep an eye on. What about the business itself? How is it performing? We know the balance sheet, so that's kind of our starter on what their cash position is, how much debt do they have. Thankfully, they don't have very much, and they are issuing a good amount of shares. Okay, so we have a nice start. But what's the business actually bringing in? Well, let's take a look at the income statement over here. We can see top line revenues have been growing pretty substantially over the past few years, especially over the last 4 or so. And they saw a massive rise in 2020 and into 2021. And that's thanks to a few factors, mainly the new consoles that came out for Xbox and PlayStation. So that was very big because having console headsets as a major portion of the business, when more consoles are sold, you could probably expect more headsets to be sold. And that is exactly what happened. But also you had a bit of induced demand for gaming because of all the lockdowns, people staying at home. You had video gaming in general on the rise, both for PC and consoles. And Turtle Beach especially is in the console space, but also has plenty of exposure to the PC market. So they had a lot of tailwinds there, and that has pushed revenues up. And personally, I'd be hesitant to expect this growth rate would continue at least at this pace because this was a lot of money coming in a very short period of time, mainly thanks to some different catalysts that were kind of outside of the company's control, and they benefited directly from it. And they are trying to capitalize on this position, so don't get me wrong. But that's another thing to just keep in mind, but we'll get back to that. But thankfully, Turtle Beach is not doing that. They're not blowing out the expenses to produce this revenue, and they've maintained some pretty solid cash flows. We can take a look at their cash from operations down here, and then we can put it in chart form. Let's make it a line graph because that would show it over time. You can see that their cash flows have increased over time, and this only goes into 2020, but if we look at the last 12 months, they're at about $30 million or so cash from operations, which is great compared to their market cap, depending on what kind of return you're going for, of course, but that is a good amount of cash flow, especially for something that's more in the tech space, as you see a lot of very unprofitable tech companies with huge amounts of debt that are trading at massive multiples. That's really not the case here with Turtle Beach relative to the rest of the market. They're bringing in a good amount of cash flow. They don't have a bunch bunch of debt, and their top line revenue still is growing. Now, again, we'll have to temper those expectations a bit for the future. As you can see, it's already down a bit from last year's peak of about $51 million in cash flow from operations compared to the $30 million in the last 12 months, but we are about to approach the holiday season, so we'll see what happens with their numbers in the next few months. But again, we'll get back to that. I'm getting ahead of myself. What about where they're putting this cash flow? Great, you have a cash position, you're not throwing it at debt because you don't really have any. So where's this cash flow going? As we can see, the return on capital number for Turtle Beach has been pretty strong, although a bit variable from year to year. We can take a look at the line graph up here, and it was pretty negative prior to 2017 before it really has taken off in a few years, and the last 12 months it's maintained at about a 41% return on capital. And I wouldn't be surprised if that's misleadingly high, but it is a strong number nonetheless, and the company should benefit from that. Whether they're going to maintain 40% per year over year is pretty unlikely, but I guess it could happen. But they're still benefiting from it now in the short term, so that's great. Over the last 5 years, they're sitting at an average annual return on capital of about 20%, which is really strong. And if they can continue that average over the next few years, you'd expect that to do some pretty good things for the business, especially because they are in acquisition mode. Now, let's see some of the acquisitions that they've been making over the last couple of years. And there are two to really note, and really because that's the only two that they've made. Their second most recent acquisition was Roccat here, which is a gaming accessory company. This is where Turtle Beach got a lot of its PC products as opposed to console products, and they've held the Roccat brand since about March of 2019. That's when the deal was announced for acquiring Roccat. They have successfully acquired it, they have successfully integrated it, and it seems like it's been a great acquisition. That's probably why the return on invested capital number has maintained a very high mark over the past couple of years. But they didn't stop there, because just in 2021, Turtle Beach acquired Neat Microphones, which is a microphone company. This is a bit less gaming focused, I suppose, but it really fits into that accessory model. They have gaming products too, or products that maybe a streamer might want to use. You're going to want a nice microphone. But in any event, this acquisition seems to be part of the larger theme that Turtle Beach is going for as it attempts to get a larger share of the PC market for gaming accessories, not just sticking with their bread and butter of console headsets, which makes up a massive portion of their revenue. And they really have a large market share of the console headset market. They kind of are a dominant player in it. So there's not a whole lot more to take out of that market. And a lot of the growth in gaming seems to be in the PC market as well, in addition to mobile. It's kind of hard to sell accessories for mobile though, so I don't think they're focusing much on that at all. Really, they're focusing on diversifying into the PC market. And it's not a diversification, I would think, because it really is part of the same sort of ecosystem of video gaming. You have a lot of the same names who will do a lot of the same games between either platform. So I think there should be some good synergies there. We'll see what they do as they continue to acquire new brands that are within the space. But again, if they can keep their return on capital number high, that's going to bode very well for the business long term. Now, I did mention that 2020 and really into the first part of 2021, it was a really good time for Turtle Beach and really just, I guess, any gaming company in general. There was a lot of demand for video game products, for consoles, for the headsets that go with the consoles. So they really benefited from that short-term event. And some of it has carried into the long term. I think you're going to continue to see the video game industry grow and grow, and Turtle Beach should be a direct beneficiary of that. But I don't think you're going to see the same sort of year-over-year growth that we saw over the last year. I don't think Turtle Beach does either, because they are predicting that there's going to be a slight decrease in earnings over the next couple of quarters, or at least into this next quarter. They've kind of warned people to temper their expectations. You're probably not going to see the same explosive growth that you saw in the last year. But kind of looking at the video game industry as a whole, this is from Grandview Research, just a quick sort of prediction, I guess, they have for the video game market. But you can see in general, over the past few years, it's been growing pretty rapidly. Though a lot of that is from mobile gaming, which again isn't really Turtle Beach's target market. They're really more in the console space right now, and they're trying to get more into PC space. But either way, they're all growing at some rate, and it's been pretty substantial. And as long as Turtle Beach has a big slice of that pie, as the pie grows too, everything should grow for Turtle Beach, which is great, as long as this trend obviously continues. There's no guarantees. I have no crystal ball. I don't know what the future will hold, but if the trend is true and the trend continues, again, Turtle Beach should benefit from it. And even if the overall gaming market doesn't grow that much, if they can maintain their share in the console market and then carve out a bigger slice of the PC market, you would expect Turtle Beach to be in a very good position, or at least a much better position some years from now. But they've made it clear that they do want to diversify away from consoles and into the PC space, as I've reiterated a few times already. So as long as they do that successfully, they should be right along with their goals. And speaking of the goals of the board, they actually recently denied a merger offer with one of their larger shareholders who offered to buy the company at $36.50 per share. And Turtle Beach said, nope, we don't want to do that. And I actually did a video a few months ago going over that offer that Turtle Beach denied and kind of the situation there. If you want to check that out, I'll include a link in the description below. But in general, they denied an offer at $36.50 per share, which is quite a bit higher than they're at now. But what I do think that shows is that management is aligned for the long term. They aren't going for that short-term profit. They could easily take the quick gain from a merger like that and get bought out, but they don't want to do that. I think they're trying to focus on building a long-term brand, which is great for a long-term shareholder, where your incentives are aligned in that case, or at least as much as they could be. So I guess the bottom line for Turtle Beach, is this a 100-bagger stock? I personally don't think so. Maybe you do, if you really think the gaming industry is going to explode and Turtle Beach is going to be one of the pioneers, or really pioneer probably isn't the best word, but one of the leaders in that space, then maybe it will have a tremendous long-term advantage. But personally, I would just say it seems like a pretty good company. It has pretty good metrics. Depending on what you're looking for in a stock in your investments, it could be one to consider for your portfolio. Again, do your own risk analysis. I can't do it for you. I don't know what your risk tolerance is. So again, it's up to your own research. And that seems like it's probably the biggest risk here, since they don't have a bunch of debt on their balance sheet. So I don't think you're risking some sort of total collapse anytime soon, since they don't have a massive debt burden. They have the $5 million in debt relative to their $55 to $60 million in cash. So you would think that's not a problem as long as the board doesn't do anything absolutely insane with all that cash compared to the debt. But that's definitely something that I value in a company. It doesn't seem like there's a massive risk of total capital loss, at least anytime soon. Of course, always subject to change. And now it's your guys' turn. I want to hear your thoughts about Turtle Beach. Have you looked into this company? What do you think about it? Have you invested in it? If so, why? What do you think for the company long-term? What do you think is going to happen? What was your investment thesis? Or maybe you hate the company, or maybe not even hate. Hate's a pretty strong word. Maybe you don't like the company and you didn't invest in it, and you took a good look at it and you decided, no, I'm going to pass. Definitely want to know why. Why did you pass on Turtle Beach? If you did, if you have looked at the company at all, please leave that in the comments below. Anyways, that's all I've got for today. So if you like this video, please like it, since that would help the channel out a lot. And if you like this sort of content about investing and personal finance, then definitely subscribe, since I put out new videos every single week and wouldn't want you guys to miss out. And check out all that great free stuff and the affiliate links in the description below. But until next time, take care.